great success of SIPs, which has been there, will continue, and it continues to be a sunrise industry.
Over the last 30 years, my experience has been that any number that we projected for the industry ended up doing better than that.
My view is that it's a huge opportunity for India in terms of mutual funds as an opportunity. And when you compare to the competing products, which I called about insurance products, I think mutual fund has to do a long way to go. I think we see as a large opportunity for us to grow.
But when you look at India, at an aggregate scale, equity markets are 4 to 5 trillion. The size of the lending book of banks and BFCs is about $3 trillion.
Just the last 5 years alone, we've seen a tripling of the assets, almost a tripling of the investors. So even if you take a more conservative stance and say it'll double from here, that's going to get to all the numbers that you're talking about. So very, very bullish on this.
Good morning and warm welcome to the panelists and those in the audience. Over the past decade, the mutual fund industry has evolved from a niche saving vehicle into one of the strongest pillars of household investing. With its growing retail participation, with the rising SIP flows, mutual funds have truly become instruments of democratized investing, bringing market-linked wealth creation to millions of Indian households. Today, the industry AUM stands at more than 75 trillion, and the number of investors, unique investors, are more than 50 million, about 5 crores. So here we will discuss today what would the next phase of growth would look like. So I'll start with Mr. Singh. Sir, how did we get here and where do we go from here?
I think, as Chairman Savi has rightly said, we have been growing at a very, very rapid pace. The growth has been more than good double-digit, 24% growth. It's a very, very, very good growth, and we foresee that the trend will continue, and the industry is going to grow very fast from here on also. And the great success of SIPs, which has been there, will continue, and it continues to be a sunrise industry.
Do you have any internal targets as to when do we hit the, say, 100 million AUM milestone or the 150? Have you set any targets as such, or?
Actually, see, we need not set any target with the growth rate which is happening. If we grow from, say, not from 24%, if we grow by 20% also, it will double from here in 4 years, right? That's the compounding works. So putting a target of 100 trillion from here on is anybody's guess. It will happen sooner than later.
Fair enough. We heard the SEBI chair today say that the AUM is just less than a fifth of the GDP, whereas markets like the US have more than 80%. Mr. Munot, is that a metric which one should look at to judge whether the industry has matured or there is a long runway ahead?
Sure, Sami, so it was very inspiring to hear SEBI chairman acknowledging the role of mutual fund industry and also encourage us to do a lot more. We need to do a lot more to increase the penetration of mutual fund industry. The industry has done a phenomenal work over the last several years. He talked about 4T in the context of SEBI, but I've been talking about 4T which are responsible for the growth of our industry so far. One is the track record. You have many funds which have been delivering for last 20, 25, 30 years. You have the transparency. We take deep pride that this is one of the most transparent industry in the world. It's a technology which has played a big role in increasing access, awareness, and it's the training. Training is basically the investor education, the effort industry has been putting together, and individually all of us to create more financial literacy, more investor education. And I think we need to continue to work on all these four to build the fifth, which is the trust. And I think as long as we keep building the trust in the market, trust in the industry, trust among the investors, and work with our partners, I'm sure we have a very long way to go. And over the last 30 years, my experience has been that any number that we projected for the industry ended up doing better than that.
Yeah, fair enough. Mr. Gopkumar, you have been on the broking side, now you're on the mutual fund side. What is the sense that you're getting? Are we on a secular growth path, or has the best played out?
I think when I look at, when I hear DP and Navneet on their views, I'm still 2.5 years old in this industry, but Interestingly was the other side of the business where I used to recommend funds. In that sense, last 25 years, I've worked in the industry so closely with AMCs. I think one thing which I, maybe a bit of argument here to get a understanding in the sense that industry large amount of AUM today, it looks like is also contributed to mark to market. We should thank the markets being where it is. Second point is that when you look at the India population and see that number of unique customers in India is only 5 crore 60 lakhs unique customers, unique PANs. So if you had to do some multiplication, it can be much more, division can be much more lesser. It gives an opportunity in terms of the headroom, in terms of the growth, what this industry has is unbelievable growth. If you look at last 20-year data also, if you look at, you will have 18-20% CAGR growth in terms of industry. The industry also grown because of mark to market. Let me come back to again my favorite topic. I think a lot to do. I think we need to do much more in terms of investor education. And one of the audience asked the question to the chairman of SEBI in terms of Choti Sep. Interestingly, say if you look at most of us, I think 4 seats here, also have a SIP at 10 rupees and liquid funds. We have gone to that level saying that we need to get customers, but from an AMC perspective, it may not be profitable, but interesting is to get this set of customers who are on the bottom of the pyramid to come to AMC or using mutual fund as an instrument of saving. I think long way to go. I think my view is that it's a huge opportunity for India in terms of mutual funds as an opportunity. And when you compare to the competing products, which I called about insurance products, I think mutual fund has to do long way to go. I think we see as a large opportunity for us to grow. And it's still a long way to go.
Thank you. Mr. Subramaniam, if you have to wear the hat of an analyst or a fund manager, do you think the industry is something to bet on?
Well, as they say, don't back your own stock or industry. But just to sort of take it back, I think to a more longer term trajectory, I think clearly there is, strong runway for growth. But at the same time, when you draw the kind of comparisons that you do to GDP, etc., we have to be careful because you can't just draw a single point correlation. You have got to look at, where is per capita income, how many people have a reasonable amount of disposable savings. So I think the task in front of the industry is really to kind of make sure, as the chairman said earlier, how do we, sachetize more efficiently so that we can take the ticket size down in terms of reaching larger number of customers. And the other point that I would make is that, I think we have to keep in mind that in terms of the growth of this industry, we've obviously seen a lot of growth coming through from the equity side over the last 5 years. The fixed income portion has not grown. But when you look at India, at an aggregate scale, equity markets are 4 to 5 trillion. The size of the lending book of banks, NBFCs is about $3 trillion. The size of the debt market is 3 trillion. So that market is underrepresented in mutual funds. Multiple changes which have caused this, but I think that will further be a significant avenue for growth at some point of time. Perhaps it will require some intervention, some changes. So I'm very optimistic about the growth trajectory being there. But the one thing, since you've pointed to investment background, I'll point out is that in everything that I have seen in investing, there is a secular trend and there are cycles around the secular trend. So never ignore the fact that there will be some cyclical trends along what is the structural story.
Fair enough. Sorry, Sid, to come to you last, but you just starting. So when you go to the drawing board, how do you see the growth of the industry? Do you think the kind of growth that we have seen over the last 3-4 years would continue, or there will be some moderation?
Yeah, thanks. And, absolutely right. We're just getting started, but that's also to your point earlier on. Would you bet on this industry? Well, we have, because we're getting started in this industry right now. And, we see, firstly, if you just look at let's say the international part of the joint venture, BlackRock, from a macro perspective, the potential that India has to offer is immense. Whether you look at it as overall GDP growth, increasing productivity, the demographics that are in play here, all of those macro trends are very, very strong for India. And then you combine that with all of these micro trends that we've talked about just here in terms of investor participation at a low level growing. I think there's a huge, huge opportunity here. which is why we're getting started. And in terms of the numbers, yeah, just the last 5 years alone, we've seen a tripling of the assets, almost a tripling of the investors. So even if you take a more conservative stance and say it'll double from here, that's going to get to all the numbers that you're talking about. So very, very bullish on this.
Thank you. One request to everybody, just speak into the mic because the audience at the back is not able to hear us clearly. Somebody talked about how the market has been a tailwind, like post-COVID, the market has seen a phenomenal rise. But the industry also has done a lot to, deepen the reach. So, Mr. Singh, if I can come back to you and tell us what the industry has done and plans to do to take the mutual funds to even more households.
I think what has been earlier talked, that we are having only 5.6 crores investors. That is something, a big challenge. We need to increase the number of people who are to come to the mutual fund industry. Even if we talk about the SIP numbers, we said, you said post-COVID, we were having around 3 crore kind of SIPs. Today we are having 9.7 crore SIPs, SIP accounts. So that has gone 3 times. But what we have seen is the growth has come in a big way because of the mark-to-market, as Gop has already talked about. But the ticket sizes of the SIPs still continue to be very, very low. In 2021, the average ticket size of the industry was 2,300. And today, though the number of SIPs have gone 3 times, it is still 3,200. That needs to be taken to the next level because the incomes have increased, the level of prosperity has increased, GDP has grown manifold. Even the growth is not in the CAGR growth of the GDP also, per capita GDP as well. So this is a big challenge. We have done a lot, but we need to do much, much, much more. I think the 3,000, taking this 3,000 average ticket size to 5,000 itself in like 3-4 years will do the wonders.
Absolutely. I think 3,000 is still a small number, and I think given the size, the income growth, I think the number can definitely go up. Mr. Munot, do you share the same view? I mean, what would it take to increase the average ticket size?
The growth will come from both sources. One is getting the new investors. We still have only 5.5 crore investors. A large number of investors are yet to join. And second, the investors who have already invested, they need to do the right financial planning. They need to do the right allocation. Maybe they have tested the market, they have tested the product, they have invested some money in some funds, but they need to do holistic planning, and over a period of time, in line with the growth of their income and wealth and aspirations, I'm sure they will allocate more. So average ticket size of SIP over a period of time should go up, and of course the average allocation from every wallet needs to go up. And on the other side, there are a large number of investors who are yet to invest. SEBI chairman talked about 13 crore unique investors in capital markets, but mutual funds are still 5.5 crore, which means there are 7 to 8 crore investors who have invested in the market. They might be doing F&O, they might be doing trading, they might be investing in direct stocks, they might be investing through IPOs, but we have a better product, more diversified, professionally managed, more convenient, efficient. I'm sure this is another cohort of investors where we need to reach out over the next couple of years.
Right. Mr. Gopkumar, you said you are about 2 years old in this industry, and often an outside view helps. So do you have any ideas to expand the reach of the MF industry at a macro level?
I think what is quickly changing is that how digital is helping mutual fund distribution, because I call digital as Bharat, and today the ease of doing business for a distributor is much more easier compared to our days, because I was a distributor, so it was much more easier because the onboarding is much more easier, KYC is much more easier, so that is working pretty fine. And also you will also see a lot of investors are adopting fintechs as a platform to invest in mutual funds. I think the digital leg is what will change and get more customers here. And it also will help you to increase what DP and Navneet spoke about, average ticket size. I think one of the areas which I think about is that the fintechs and the digital interventions will help you to improve, because when you look at the most of the dashboards of even a simple MFD to a fintechs have largely improved, because they are able to give a customer an intervention in terms of what does the mutual fund portfolio looks like. And that's one of the areas which I think that if a customer has to increase his ticket size, you need to ensure that there is a transparency in reporting. In our days, it was paper, pencil, where we used to go in Excel sheet to a customer and explain. Today, I think the client engagement at the distribute level is much, much higher than what it was 20, 25 years back. Because there is a large amount of transparency, you can see a live his portfolio looking like. So my bigger bet is that. Second intervention, which I think I touched a bit, which was my favorite topic, is that how do you get the bottom of the pyramid of people coming here? Because India has large amount of people at the bottom of the pyramid, and how do they come to a mutual fund because they are largely investing in FDs and put money on chit funds, they put money on typical credit cooperative societies, which we see every day when you go to a dukan or come out of the house, you'll see that. I think there a lot of work is happening. Let me tell you that fintechs are doing a lot of jobs. Industry is supporting these fintechs by reducing the ticket size and getting this set of investors. So I'm pretty hopeful that maybe 3 years from here, I think we'll have much more customers, unique PANs, unique customers coming to the industry.
Yeah, thanks. Mr. Subramaniam, if I can come back to you. UTI is a legacy or a traditional fund house, and how do you look at these various channels that are available to as touch points to go to the investors, and which one could sort of be more efficient?
Sure. Thanks, Hani. I'll just take that in a slightly different thought process. You're right, UTI has been an institution which helped sort of create the investment culture, goes back to our legacy more than 60 years. And, we've talked a lot about where to get new customers from. But I think from our vantage point, when we look at customers over the last 60 years, we ask ourselves the question, why do we exist? And we exist for a very simple reason, which is to enable our customers to meet their goals and aspirations, the financial side of that. When I look at that and I look at the client data, there are two things which strike me significantly. As much as there is scope to grow the industry, we will fail in our objective of enabling customers to meet their goals and aspirations if we don't make sure that they stay for a long period of time with their investments with us, right? So I think as much as it's very exciting to talk about, the new avenues and mediums and products through which you can bring in new customers, really it will be rewarding for my customers, for all our customers, only if they stay with these products for their entire financial journey. And I have been a part of this industry where in 2010, 2013, we saw the actual folio count drop by almost 20% during a difficult 2 to 3 year period. So I think as much as we look to grow the industry, we as an industry have to take the responsibility for educating our customers, the investors, the partners, the distributors, and everybody who's part of that ecosystem, to continuously remind them that they will get the benefit of the financial products that they have come to us, they have invested with us, if they stay there for the length of the entire journey, and that's a 10-year, 20-year journey. So as much as it's nice to talk about growth, I think as an industry, we carry the responsibility of what I call N, which is the period of time for which they stay invested in our products, because that is when the magic of compounding actually happens.
Yeah, this is a very important point, and we'll come back to how the market volatility, has impacted our investment behavior. But before that, Sid, there is this buzz that, we'll have a Jio moment for the mutual fund industry. And given the reach of one of your parents, do you think there is a scope for disruption in this space?
Sure. So I'll answer it in two parts, right? So firstly, it's a very different industry, right? So the players are different, the rules are different. So I think, comparing, mutual funds to telcos is probably not the right thing to do. But I do think in terms of how we are, approaching this industry right now with our go-to-market strategy, there are several, let's call it micro disruptions that can happen, which over the multiple years could lead to a bigger change. Now, we talked a little bit about the digital ecosystem, right? And I think that's one that we've clearly leaned very heavily on. And to the points made earlier, that's super encouraging even in our early days. So we have roughly about 7.5 lakh investors right now, almost 10% of them are completely new to the industry, right? So that's a very good stat for us to see that through like digital means, we're able to reach people and we're able to bring more people into the industry. That's a very early encouraging stat. Now, the key, obviously, to keep this going is education, right? So that has to amplify. So we have to do more. We have to do a lot more in regional languages so that people can understand. So we need to meet the people where they are. And again, technology is enabling that. And to the point that the chairman made earlier, with AI, you can easily deliver, bite-sized content in many languages, in many styles across the country. So I think that is a huge, huge enabler with digital. And once we do that, once we educate people about the importance of investing, staying in the markets, and with SIPs, we're seeing some of that behavior coming through already, and then build the trust, then the phone becomes like the biggest liberator there is, right? Because no matter where you are, you're able to access it, and we're seeing more and more people in many, many parts of the country do that. And even in our early days, we're seeing nearly 40% of our retail AUM come from the B30, which is actually above the industry average. So these are all very positive signs that we are seeing in our early days in the market.
Yeah. Now let's sort of understand from you what has been the, how has the market volatility impacted investor behavior? We have seen last 1 year, the benchmark indices have not gone anywhere. So is that something which is worrying investors, or do you continue to see them remaining for the course of, like say, 5 years, 10 years? Mr. Singh, if you can take that.
I think volatility is part and parcel of the market, and we have to live with that. As Chairman Sabi rightly said, it's not that we cannot ignore the shocks, we cannot ignore the volatility, but our ability to come back strongly is there. So I think our markets are very, very resilient. And today, when the industry is reaching almost 35 lakh crores in the equity assets, with the average 5% cash also, we'll be sitting on 1.7 to $2 trillion of cash at any point of time. So any shock which comes, the volatility, the industry is able to take care of that. And any fall is seen as an opportunity. That gives a lot of comfort to the investor. But while saying so, yes, our markets, volatility plus the valuations. Valuations are definitely stretched as far as Indian market is concerned, and but the growth is also here. So we have so many pluses, so many minuses, so all put together. The industry is very resilient, and I think Navneet and Navneet and Vetri from the investment side also, they'll be able to respond better. But from the market point of view, I think volatility will continue to be there. We're going to have its phases every now and then. Different cycles will come, but the long-term story will remain intact, and that we have seen the small investors, the retail investors, have seen a very good cycle. They have not, we have seen a very positive side of the behavior, that as and when market falls down, more and more people are coming into the market. So why we are talking more about the SIPs? Because in the net flow in the industry, the major part today is being played by the SIP flows, which is almost 30,000 crore now. So going by these volatilities, I don't think there's any challenge. We'll continue to grow with the kind of potential which is there. So we'll continue to grow with the volatility.
Mr. Munot, Mr. Singh just said that volatility so far has not been a concern for the industry. Do you also echo the same sentiment, or you have a different take on this?
No, I mentioned earlier, we have funds which go back 30 years, and investors have seen that there have been like many periods of volatility. That's the nature of the beast. It's inherent part, integral part of the equity market. I think over the last couple of years, the good work industry has done, and a lot of credit to our distributors and advisors who have been handling the investors, mentioning the point that take advantage of the volatility and don't get swayed by the volatility. Volatility can be your friend. I mean, if you are investing in a disciplined manner, if you are focusing on patience and consistency rather than getting swayed by it. And I think that has been keeping us in good stead so far, and I remain confident that if we continue to remain on this path of the investor education that all of us put together have been doing, I'm sure there would be more resilience, there would be more discipline among investors. I think that's one of the biggest challenge as well as the biggest opportunity for the industry.
Right. I'm sure most of us often think about this, that the markets are not doing well. One should.
So our SIP book was 4,000 crores in 2017, and it is 29,000 crores now. During this period, we have seen a big, I would say, boom and bust in mid and small cap in 2017 to 19. We have seen the COVID period correction in 20. We've seen a lot of volatility in 22. We have seen a lot of volatility in last 12, 13 months. But that SIP book has continuously been growing, which is a reflection of maturity of individual investors, which is a reflection of resilience of individual investors.
That's true. But then this is the first time that we have seen an extended period of volatility. I mean, post-COVID, the markets were on a secular growth path. But right, as you rightly said, patience is something that investors should follow. Vetri, I mean, do you think this is a stage where somebody should, there's a case to increase your investment in the markets, or how does one sort of look at the consolidation in the market? Does it call for more investments, or one should, I mean, take a step back and wait for more correction?
Sure. Honestly, the way I would answer that is, there's no point when you're trying to achieve your financial goals and aspirations to keep second guessing and reacting to the market. So really, the only way I always answer this question is stick to your financial plan. Stick to your asset allocation. As long as you're doing that, that will get you to your destination. Leave it to the fund manager to figure out how they want to deal with the challenge of volatility, how they want to deal with the challenge of valuations, how they want to deal with the 101 challenges that will happen. See, the market is a very surprising place because unexpected things always happen. Sometimes they're good, sometimes they're bad, sometimes they're difficult. Leave that to the fund manager. I think my message to investors would be stick to your financial plan, stick to your asset allocation. That is what will get you through to the destination. And, I think on the point Navneet made, without doubt, I think, the kind of steadfastness we've seen from investors at this point of time in terms of the SIP, the pipeline. Yes, there have been some cancellations, but at the same time, I would say net-net has been a very positive trend. So I certainly take heart from that. But all of that should fit into a financial plan. I think as an industry, what at least certainly at UTI, we always lead with on the front foot is that don't just go to investors and sell returns. If you at the outset explain to them risks, if you are able to highlight the periods of volatility that they are likely to experience during their journey, then they are better prepared to tackle that volatility during their journey. If you have never prepared them and you've only sold them the 5-year historical return on the fact sheet and they haven't understood that that journey involved volatility, then they will be underprepared when that occasion actually happens. So I think if you can prepare the investors for the journey appropriately, then they will be able to, continue through the journey for much longer periods and get the benefit of compounding. And believe me, as an investor, I've been doing this for 30 years. There are some things in the markets that you learn only by experiencing. It cannot be taught to you. And I think, therefore, everything that we can do to handhold the investor during that journey, give them that experience of coming through a slump, that's when they really start to appreciate the product and the investments that they've made.
That's a very powerful message. We have just 2 or 3 minutes before we can open the floor for questions. Sid, I would like to ask you about passive investing. Last year, we saw the number of account additions on the passive side were more than the active side. So is that space which will continue to grow faster than the active, or how do you see both active and passive? What would be the investor preference between these two?
Yeah, I think firstly, it's never about active or passive. It's always active and passive. So I think both play a very important role in an individual's asset allocation. And I 100% agree with Vetri. Like, asset allocation is the most important thing in terms of individuals achieving their goals. In terms of the growth, yes, I think there is a lot more scope for the passive business to grow here. We're still at about 17, 18% of the market. If you look at other sort of developed markets, Europe is at over 30, 33%. The US is over 50% right now. So as more and more people think about their asset allocation and say, okay, what part of it do I want to allocate to just a passive portfolio, and where do I really want to focus my efforts on doing something active? I think you're going to see more and more of that. Obviously, there's cost benefits as well to doing that. So yes, is the short answer, is that there's a lot of room for growth from here.
Right, Mr. Munot, before we let you go, I mean, you're the largest listed AMC. Two things. One, how is the rising popularity of passive funds impacting your margins? And two, SEBI recently came out with some measures which we saw the markets react negatively to. So do you think that as the industry grows, there will be more pressure on costs?
I mentioned about the track record of our active funds for 30 years, but we are also one of the oldest player on the passive side. Several of our strategies have been there for 20, 23 years or so. For us, more important is how are we serving our investors. And we want to be a one-stop solution for each and every investor in India. Our mission is to be the wealth creator for every Indian, And if they want to have a passive in the portfolio, we have the full product range, be it index fund, be it ETFs, be it market cap based indices, smart beta, sector thematic funds, so on and so forth. And of course, we have an active funds as well. So for us, it's up to distributor and the advisor to create the portfolio and for the end investor to choose. And we don't look at like, how we, for us, it's important is that wherever we have the investment capability and the risk management and product capability, we would offer that product to the investors. And it's up to the investors to choose. Also, I think while globally there would be a higher proportion of passive for a variety of reasons, I think very few fund houses in the world can boast of the track record that we have for 25, 30 years in India in terms of the outperformance. A lot of people look at the number of schemes outperforming or underperforming. If you just flip that to the AUM outperforming or underperforming, we'll be positively surprised to see that in India. On that note, if you let me go.
Yeah, please. Mr. Munot has to be somewhere. Thank you, sir, for being. Thanks a lot. Thank you, sir. We'll just quickly have another round of questioning, and then I'll take some audience questions. Mr. Gopkumar, SEBI has brought in new avenues for AMCs to, increase their profitability. SIF is one such thing. And also SEBI has proposed to relax certain clauses which will allow fund houses to get into advisory and other kinds of related business. So do you think, what do you think of these new avenues from a AMC point of view?
I think SIF is a good move because even though there's 7 categories, helps us to innovate, because most of the time when you look at innovation in the mutual fund industry has become restricted because largely straitjacketed by the regulator that what you can do, what you can't do. I think in terms of that, I think SIF is going to be a large category. That's our view. We are very clear that it can impact a couple of categories in the mutual fund, and that will help us to grow in terms of industry as well as we as an AMC. So that's one category which we do believe it is going to be a large category and huge opportunity for the industry. It will play out from a 12 to 18 months perspective because now the products are getting launched in different categories. I think it will take time, but I think you will see that this is going to be a very important category, and it's also going to be an important category from a customer asset allocation perspective. I think my view is that a couple of categories like arbitrage, hybrids, you will find this product to be very, very competitive, giving the similar risk levels. You will find that opportunity. Second area is on the advisory side. I think there are opportunities on the advisory side which industry is looking for, because there are opportunities where large family offices want to look at customized portfolios, which today we can do, but we can't do in some categories for the restrictions. I think this allows us to relook at it. I think that's one more opportunity. I think the last thing which I want to talk about is that everybody refers to 3 days back, whatever time bomb, whatever called as. I think it's a great change because there are a lot of clarifications that the industry is required. I think that is done. my view is that more and more we become transparent in terms of charges, what we charge to customers. I think the industry will grow further because a lot of trust will come into play. I think
Sure.
that's one thing which I want to make a remark about.
Mr. Singh, very quickly, you are one of the first entrants to the SIF space. Do you think SIF will sort of eat into the existing AUM, or it will create fresh opportunities for the industry?
No, definitely, see, the category-wise, it may have some polarization, but overall, the category will grow and the whole industry will grow. This is a new innovative product, and some of the things which were not available to the mutual fund investors, that is being made available. As Chairman Sabi clearly said, the PMSs, etc., are the personalized accounting and personalized taxation. On these things coming on the mutual fund platform and giving the different kind of solutions, I think it was a need of the hour, and it will grow and grow very, very fast. This will help in growing the industry. Yes, we have launched one fund initially. Being the leader, it's our responsibility to do it. We are taking the baby steps, we are learning, and I think we have done a very, very good job. We targeted a lesser amount, lesser people, because number of distributors who have cleared the exam is very, very minimal. Right. In my knowledge, in Pan-India, there are around 2,000 people who are certified people. And you will be surprised to know that 30% of the investors who came into SIF category, 30%, are new to the industry investors.
Okay, interesting.
Which is, otherwise it was being perceived that the people, old investors, people from mutual fund will go to there. Right. 30% of the new investors and 70% of that have come under the direct category.
Okay, interesting.
So that's the kind of the role of digital, role of the media, role of education which is happening in there. So those are some of the trends which we need to work on. That is telling us something. We have to create more number of intermediaries, more number of distributors who can get themselves certified. Right. And I think we have the firm view that this will be a new growth trajectory for the industry.